All right, Jason. So we're trying to do the math. I didn't have a calculator. I couldn't do the math in my head before the call. So you've been at iStar for 17 years, almost 17 years.
Yeah. Oh, yeah.
And so how many earnings calls or investor events do you think you've done?
Ah, geez. I will say this. I've done 67 with iStar, and 5 years ago we launched Safehold. And so instead of doing four earnings calls a year, now I'm doing 8 a year. And so I would say over my tenure here, I've done 89, approaching 100 earnings calls.
Century Club.
Yeah.
Nice. Awesome.
You've seen it all over those years.
Yeah.
We've had technical difficulties. We've had issues with the SEC website. We've had callers call in that probably shouldn't have gotten in. We've had executives that couldn't make it in that day. So we've had every single mishap. You got to prepare for all of them. And you got to just assume that over time, everything's going to happen.
There has to be some sort of meme created for earnings call issues for IROs.
Someone more clever than me should definitely work on that. I think that would be, at least for the small audience of people that know, it'd be a riot.
Yeah. For those that know, they know. So then you are extremely qualified to talk about our topic today, which is earnings calls. And I think the first question we wanted to get into is why are earnings calls so important? And how can IR teams make the most of them?
It's a great question. The way I think about our earnings calls, and it's evolved over time, my own thinking on it has evolved, but I really think that the earnings call represents this incredible opportunity you have every year, every quarter rather, to tell your story to probably the largest audience you're going to get every quarter. And perhaps the common thinking is we just got to talk about our earnings and let people know what happened during the quarter and answer some questions. I think that in many ways that is a missed opportunity. Being able to communicate your strategy, how your performance in the quarter helped advance the goals that you've set out. And I think reiterating for the investment community, your vision is just as important as talking about what happened in the quarter. And I think by doing that, not only are you going to be providing a service to investors and helping them understand not just, what happened, but why it happened and what's important, and simplifying it for them in a world that has so much noise and data that all comes at them in a short period of time. I think you can also make the earnings call that much more useful and important to listen to, and in effect, grow your audience.
Yeah, that was one of the things that you mentioned in a previous conversation we had, this idea of growing the audience. Any thoughts on what companies can do to grow that audience? Things that have worked for you in the past or maybe that you've seen other companies do that you thought was interesting?
I think what we've seen, not just in the IR world, but really across almost any corporate effort these days, is really about growing your audience. Whether you are a consumer brand or if you are trying to create content or if you are just in general, I think trying to grow your business, building an audience of people that care is paramount and critical to getting kind of the word out about your company. And I think IR should really is no different. And in fact, I think there's a lot of things we can learn from how sales organizations work and how content creation works and how marketing functions work. And what can we learn from all those efforts and bring that into the IR world? Growing an audience is critical to being able to tell your story to as broad a audience, a universe of investors as possible, and hopefully find the right investor base that ultimately achieves our goal of, you know, getting our securities as fairly valued as possible. In fact, I think it's so important and so misunderstood that in some ways we look for ways to evaluate tangible, hard ways of evaluating the success of an IR effort. I think we all understand that the stock price is not a good one, and measuring how many meetings you do and some of the other sort of more quantitative ways. There are pros and cons to all of those. One of those in the mix, I really think should be how large your audience is every year, especially around your earnings call. So, you know, being able to grow your audience is not easy. I think a lot of what can make that successful is making the earnings call something that you want, that investors have to tune into. You're going to give them information on the earnings call that they can't get from a press release. They're going to listen to the tone. They're going to get new information. You're going to simplify things. You're going to wrap the whole earnings into a narrative. You're going to have dynamic questions that are you're prepared for. And I think, and then as time goes on, exploring with different formats, whether you're doing slides that you're talking over, or ultimately, as I think as earnings call evolve, more likely they will turn into video calls. And so creating content in a format that is a draw for investors to listen to ultimately is going to be one of the ways you can grow your audience.
Yeah, those are great points. And one of the things I think is really important in that comment you made, which is thinking about the content and thinking about the narrative.
Yeah.
And that was something that jumped out at me because I do think, to your point, a lot of these earnings calls do tend to be very focused on financial metrics, and it can be a bit dry at times and hard to get through. And so you talk about deciding on what are some of those key themes. And so how do you do that? Maybe you can speak to that.
Yeah. I think that's right. I always like to start off our earnings call with, you know, reminding our investors of what the strategy is. Yes, we just told them 3 months ago what the strategy was. Okay, let them know again, and continue inculcating into the investment community what's the strategy, what's the vision, what's the goals, how are we going to get there. I think the measure of a good communicator and CEO is you can ask any employee in the company, what's the reason this company exists? What's our mission? And any employee should be able to rattle that off. If they can't, then you know, management's not doing a very good job of focusing everyone so that we're all rowing in the same direction. I think the same can be true of an IR effort when you're talking to any investor that's engaged in the story, that you should be able to ask any investor, what does this company do? What is the purpose of this company? What's its mission? What's its strategic, advantages? And they should be able to tell that to anyone. And if they don't, then maybe you need to be spending more time on those basics. And so don't miss that opportunity. And usually it's probably most appropriate in the CEO's commentary to talk about, again, reminding everyone where we are and how this quarter fits into that bigger picture. Do we achieve any objectives this quarter that are aligned with the goals, or did we push forward on some of these objectives? I think that's the first big thing that you should tackle every single quarter. The second thing is there's lots of data that's flying out all over the market around earnings. Putting out a 22-page press release with financial tables and paragraph after paragraph and asking people to digest it in an hour or two before your earnings call. I know that's what a lot of them are forced to do, but make the earnings call about, let me tell you the three things you should remember and you should understand about what this quarter was, both good and bad. But here are the good things that happened that were positive during the quarter. Our results came in as expected. Our results were better. Our results were worse. And why were they worse? We achieved A, B, or C, and we going forward, we think we can achieve X, Y, and Z. So I think really framing the entire earnings call around three big ideas that then you can continue to support it. Because the truth of the matter is, at the end, when people get off the call, they're not going to remember everything you said. And so make sure that at least there are three big ideas that they can remember when they get off the call.
I think that what's great about that is two things. One is, to your point, it drives home those points that you really want to make sure people remember. Whether that's, to your point, how you present it, if you just keep repeating the same points over and over again through the call to drive it home. The other piece, though, and didn't really think about it until you were going through this now, which is a lot of, I feel like there's been a lot of criticism of the quarterly reporting. It's too short term. We're not thinking about the long term. vision or opportunity of some of these companies. And I feel like that approach of saying, here are the three ideas, but also let's keep reminding people of the strategy of the vision of where we're going also can probably help to avoid people having too strong of a reaction to anything on a quarterly basis.
Yeah.
Yes, these were the results in the last 90 days, but don't forget where we're going over the next 5, 10, 20 years.
Absolutely. I think providing context around your results is key for the earnings call messaging. And so if the results were, let's say, lower than expectations, that's okay. Be straightforward around that and provide context. Like, listen, this was a quarter that overall markets slowed down. We are impacting our own ability to transact during the quarter. But as markets stabilize, we'll be moving forward. We took this time to be more defensive. We took this time to be more prudent, or however you want to position it. Um, Again, in the context of the larger strategy. And the more you can go back to that, I think it does ground investors into why you're doing the things you're doing. And it then doesn't necessarily make it all about, you know, the quarterly results and the quarterly performance.
Hmm. Okay, great.
And Mark, the other thing I would say is the last thing you can do, or at least another thing you can do on your earnings calls, again, to try and build an audience and make your calls something people want to tune into, is think about what's the what's some data points or what's some interesting context we can save exclusively for the earnings call? What's the exclusives that we don't put into the earnings release, but we only really share with people that are tuned into the earnings call? It could be perhaps guidance, longer term guidance. It could be some metrics around, let's say, investment activity or capital raising, or something that not necessarily critical to the financial results, but as an investor who's following the story, certainly nice to know. So think about how you can create some exclusivity around the earnings call and giving people another reason to tune in.
It's a great idea. You've used the term mission critical when not on this call yet, but when describing earnings calls, which is why there's so much talk about everything going well and the different providers that provide the earnings, the conference calling technology, all these different things. What are some of the steps that you and your team take when prepping for an earnings call to ensure that it goes smoothly?
It's interesting. IROs are in this really unique and challenging situation, which is, on one hand, we have this great opportunity to have this big audience, and we want to tell a great story. We want to grow that audience, make the earnings call compelling. Some of that requires being creative, trying new ideas out, trying new formats, trying new content, bring in new people, make it something dynamic and engaging. At the same time, your earnings call is, again, your largest audience every single year. And it certainly puts the company in a big spotlight. It puts the IR function in a big spotlight, and everything has to go. It is a mission critical part of the IR playbook, because if things don't go well, it certainly is a black mark on the company. It's a black mark for IR. It undermines a lot of the credibility that if you can't make these things go nice and smooth. And so as a result, half the time we spend on ensuring processes are put in place around the logistics of the call. Our vendors are really important, and vetting your vendors, and also, preparing with your vendors has been big part of what we do. I often remind our vendors, you guys think you're in the webcasting business. You are not. You are in the let me sleep well at night business. So if I sleep well at night, you're doing a good job. If I'm worried about things not going well, that's a big problem. I'd say the part of the earnings call that is the most risky is the Q&A session, the Q&A section. And how do you prepare your management team for questions that could come up, both good and bad questions, and how we want to handle them, how we want to prepare for them. Obviously, any questions can come out of anywhere, and it's live, and you want to be really well prepared for that part of the call. And I think we spend a lot of time thinking about what questions could come up, preparing, doing mock Q&A sessions, getting feedback. I'll even talk to our research analysts and say, what are you hearing? What are you interested in? I'll listen to peer earnings calls, especially ones that are covered by our research analysts, because oftentimes research analysts have thematic questions that they're asking across all of the different companies they follow. And so that can give us a little bit of a clue as to what they might be interested in or what they might be asking us. And so as you do this every quarter and you're paying a lot of attention, you will get better at it. But the reality is we don't bat 100, certainly not every single quarter. So it's,
I have a sort of a bit of a random question here, but I saw this actually came up in the Neary forums recently. I think somebody was asking about feedback for management, or maybe it was presentation training for management. When you're working with your management team, obviously they're a big part of this
yeah.
presentation. And so how do you work with the management team to build the script, but also provide feedback? Because a lot of what we're talking about is it's that storytelling. It's like, how do you make it engaging? Have you done things like that in the past where it's like open feedback session or speaker training or anything like that that's been helpful?
Yeah. We've done we've done media training, and without trying to single anyone out, we'll do media training for the whole management team. And even though that clearly there are people that are better at this and there are people that could use more practice and more feedback, and that allows a third party to really give the feedback without. And so it's a little bit more indirect, but it can be very effective. And doing that, we can't do that all that often. But let's say when we were doing an investor day, we said, look, this is important enough. We're just going to have media training come in and everyone's participated in it. And generally, actually, even people that are good at it felt it was useful and they felt they got good feedback. So I think it was certainly positive. If you're not doing an investor day and you're looking for an opportunity to do it, you can just say every few years, it's a good idea to just practice and watch yourself present and get the feedback. We are very involved in writing these scripts too. For the CFO, we write the script. And so we take our first effort of really telling this story in a way that we think makes sense. Obviously, our CFO will apply their own voice to it and make their own changes. In our case, our CEO writes his own script and he's very good at it. But if necessary, I would write the CEO's script too, and then give them something to react to rather than, let them do it on their own. I think both of those can be very helpful. And then at the end of the day, part of your job is to offer as constructively as possible real feedback. Maybe you should, people are concerned about, people listen to tone. I can't tell you how many times investors call me after the earnings call and be like, the message sounded really good. Your CEO sounded negative on the call. Like, people pay attention to these subtle cues. And so it could just been he was tired and that is communicated. And so you could absolutely provide that sort of feedback and just say, look, investors paying attention to it. I know it sounds silly, but if you convey a positive tone, it's going to be communicated. If someone's going too long, listen, we don't need to get into so much of the details there, or feel free to, if you don't want to answer the question the way that they're framing it, answer the question you want to answer, and then you can let them know that we'll follow up offline. Or there are other ideas that you can give them depending on the situation that doesn't necessarily create tension, but I think could be very additive and constructive.
Yeah. I was at a Neary panel event recently and somebody was talking about investment managers who have hired like FBI investigators to evaluate the tone and body language of management teams on these earnings calls. And I was like, wow, that's maybe a little bit too
Yeah,
much. But to your
I'd be
point, people are
curious to
paying
see if
attention.
that actually makes a difference in their investing strategy. Because I will just tell you, as any IR professional knows, that by the time you get into earnings call, everyone's tired, and there's board meetings, and there's so many other things happening, and you do have to just really put on face for the earnings call, and sometimes that comes through, and sometimes it doesn't mean anything is concerning going on at the company.
Yeah.
But
Yeah.
it's an interesting strategy. I'm curious
But
to see if it actually worked out.
it goes back to the point of people are paying attention. So it's the importance of the
They are.
script, right? And
They
really
absolutely are.
thinking through and what's the message and people are really listening. So going back to the sort of first question that I asked you, 17 years, 89 earnings calls, what's changed? What would you say have been the biggest changes from when you started doing these earning calls to now? Are they relatively the same? And then obviously we went through the pandemic, everything went online, it went virtual. Do you think expectations have changed?
Yeah, lots changed over 17 years. I think that back then, the earnings press release was everything. You put everything into your earnings press release. You put all the data, you put all the tables. It was a 26-page document you put out there. And in general, your earnings call was just regurgitating your press releases. At least that's, you know, when I listen to earnings calls and earnings calls, it felt very much like that. And honestly, you could get a lot of what you needed to do out of the transcripts. I think over time, as the technology has improved, you have seen companies really rely more on the earnings call. The earnings release has become much smaller. Many of them are using earnings decks rather than a press release, and using the earnings call as an opportunity to really present the content that are in the decks. And so I think you have a very visual and audio combination there that makes it much more engaging, much simpler, more memorable, and differentiated than a lot of other companies are doing. And again, as we've become a lot more comfortable with video, Zoom and Teams and, you know, WebEx, more and more companies are starting to just go to a full video call. Again, I think a lot of this stuff is really exciting, continuing to push what can be done on an earnings call. But this is where I start going the other way, which is, again, we always have our foot in both on both sides of this, which is what risks did doing a video call create? There is no more slipping a piece of paper with
Right.
the answer to the question that someone asked to your CEO so they can answer it very, smoothly. Everything's much more exposed. And I think that the trend seems to be going in that direction. I am cautiously watching and appreciating that right now we get to be still audio only for our calls.
I feel like a lot of people will do that until, I mean, hopefully not, knock on wood, something goes wrong and then
Yeah.
people will revert back to the risk-free or less risky approach to it.
Yeah. I've seen other interesting, formats. I think I love to see people exploring it. One interesting format that some folks do is they invite a research analyst and they'll rotate it on to basically conduct a fireside panel. And it'll be the CEO and the research analyst. It's a video, not that dissimilar to a fireside panel you might do at a presentation, but it's very much kind of earnings focused. And again, it can feel more like a conversation, which I think is, again, an interesting idea. One of the things that you can use your earnings call for is also as a way to build your relationships with your research analysts. It is our relationship with research analysts is very symbiotic. I do think it's a partnership. We certainly rely on them and get something very valuable out of them. They rely on us and get something very valuable out of us. And think about how you want to cue your Q&A session during the earnings call. Definitely one of the ways you can reward research analysts is by making them first in the call. That first question is definitely the one that gets the most eyeballs on it. They get the best, they get to pick the best question to ask. And I certainly put research analysts that have gone above and beyond and paying attention and writing and working on the company. I give them the opportunity to ask the first question. And I think they really appreciate it. Some ask, some say, hey, can you put me in first? So it definitely matters to them. And so think about your earnings call also as a way, as a carrot with some of your research analysts.
Right. So we've covered a lot in here, a lot of great tips, good actionable stuff. A few that I've noted down. One of the first ones you brought up was the idea of growing the audience. So think about the earnings
Yeah.
call as not just a reporting exercise, but an opportunity to speak to the audience, and growing that audience over time is obviously something that is very valuable. Thinking about the content, how do you make it interesting? Deciding on those main points and
Yeah.
having those main points drive the earnings call rather than perhaps the other way around. We talk about being creative and pushing boundaries, but finding balance and not
Yeah.
going too far. And then this last one you just made, which is using that earnings call as a bit of a carrot in the bartering process with the sell side. Anything else we missed?
I'm sure there's always more ideas that people will have around how to make this as useful of a time as possible. There's lots of people that are exploring interesting techniques, whether it's or rather interesting formats, whether it's a fireside chat I mentioned before, bringing in other members of management to talk about a specific part of the business. To me, again, those are interesting to watch, but I'm always those all seem additional risk that doesn't seem quite worth it at the moment.
Right.
And so I think each individual IR is going to have to find the right balance for themselves and find the right balance for their companies. But I think that by being thoughtful and purposeful in how you approach it will make you much more effective in the role and help the decision making process in terms of, do we want to do this? Does it help grow our audience? Does it make the call more engaging? Does it add risk? Um, it's going to make you much more efficient and effective.
Awesome. Jason, 17 years, 89 earnings calls, lots of good learnings through the process. Thanks a lot for the time. Really appreciate it.
Thanks, Mark. Appreciate it.
I hope you enjoyed today's episode of Winning IR. For more winning ideas, make sure to subscribe to this podcast. This podcast is brought to you by Irwin, a better way to manage investor relations. For more information, visit www.getirwin.com.